Welcome back to Game Plan Meeting. We are now April 9th, 2015, and we're going to start out with the SPY again and then briefly go into the Russell 2000. I always like to start out with the top-down approach where we're looking to see what the general market is doing, looking to see if there's a general edge, and then going down into the individual sectors and stocks. One thing to keep in mind right now is the VIX is very, very low, and without getting too much into it if the VIX is new to you. The VIX is the volatility index, and essentially it gives us a heads up on whether or not we can expect wider swings during the day. And that's a very broad generalization, but my point is what we're seeing in the VIX as an indicator telling us what's going on in the overall market is being reflected in the market itself. So the point that I'm making here is this and this is showing us the prior month. This and this is showing us the prior week. So this week here and the range of where we have an inside month and an inside week, which essentially is reflecting the fact that there is not a lot of volatility in the market right now. If you've read William O'Neill's book, How to Trade in Stocks, phenomenal book, he literally says 38% of a stock's move over from his statistics, which go back 100 years, reflected in a stocks movement. So 38% of a reason a stock will move is because of the general market. So you can absolutely earn money without the market being obvious. It just always pays to know what's going on in the general market, so that you'll know if you have that extra juice behind, behind the ideas for that particular day. And as you can see right now, there is no extra juice in the market. So we discussed the SPY. We have an inside week, inside month, almost an inside day yesterday again. On the blog yesterday, we mentioned the IWM, the Russell 2000 small caps. We did mention that they were leading the market, and you can clearly see that as well. And when I say clearly see that, I mean that they had a very good trend day from low to high. So there was a really, really good market move. Now, depending on who you speak to, a lot of people will tell you that the Russell is either leading the market right now, or the other camp is that people flock to small caps when they can't make the same. Excuse me, they're not small caps. Uh, Smaller stocks, small capitalization in general. When they can't make the same money in the large cap stocks, meaning the consensus would be that large caps have played themselves out, and then the money starts to flow into the stocks that are in the Russell. I don't know if that's a hard and fast rule. However, the Russell is showing much, much better relative strength after the market started to go sideways. So again, you can just eyeball that. There's where the Russell's doing since let's call it mid-October of 2014. And there's where the Spider's doing. So Spider's not exactly collapsing, but the Russell is still obviously trading to the highs, so showing some better relative strength there. All right, so what we're going to do now is we're going to jump into what I've been showing you every day, which is FinViz. Again, this is the free version that I'm about to show you, and I wanted to game plan today in the context that we are going to be much, much more stock specific because of what's going on in the general market. So as I've shown you before, I have some presets here. The one that we're going to look at today is a preset of volume, average trading range, and price. Okay, and stocks only. So you can see it's minimum of $20. Average true range, which is the average range the stock moves from low to high, and I have it set as over $1.50 average. Over 2 million shares. Now again, the 2 million shares is completely up to you. I just like 2 million shares because it gives me good liquidity to trade size. There's really no other way to put it. It's interesting. That's actually an interesting point to bring up. I've had a lot of traders over the last 15 years tell me, well, I'm only trading 100 shares, so what does the liquidity matter? Well, you shouldn't be striving to only trade 100 shares. You don't want to trade 100 shares and trade very illiquid stocks just because you're trading 100 shares. You want to get to the point where you're trading to actually make money, not just to say, I traded this stock that was, it could fly $1 in a blink of an eye, or you want to trade. Actually, I'll take it back to the way I used to practice in baseball, which used to drive everybody nuts who was lazy. But you want to practice the way you plan on playing in the game. There's really no other way to put it. So you want to make sure that even if you don't go to where I go with 2 million, and that could be a little bit high for specifically for a day trader. Swing trader now is relative because you're not going to be getting in and out as quickly. You know, the exact penny is not really as important as it probably is for a day trader. You don't want that slippage and whatnot. But as a general rule, 2 million shares, 1.5 million average true range. That's played me pretty well over my career. And actually, it's stocks only. This is the point that I want to make up. Out of all of the stocks on Wall Street, only 97 stocks fit that criteria right now. Actually, I'm not 100% sure you can see that. Let me just slide that over. Okay, only 97 stocks meet that criteria. Now, we're going to look at these stocks initially, but I want to also mention something briefly here. This part of the scan here, the relative volume, essentially what this scan will tell us is what the stock did relative to what it normally did. So in other words, if it normally does 2 million, let's say we put over 1.5. That essentially means that it did 1.5 more than the average. So for example, if I click that, it pulled it down to 8 stocks. So these 8 stocks did 1.5 times more than what they normally did. So why does that matter? Well, that is telling us these stocks were active yesterday on a day that there was not really massive stuff going on. So what I would normally do is I would go to the charts on those stocks and I would just look to see what kind of days they had. And I'm pretty sure these are all on the screen. I maybe have to pull Baidu over a little bit, but just going into Bob, actually a lot of the stocks are in the same sector, so immediately they're telling us the sector is good. So you can see clearly a good solid downtrend here in Bob, but we had a good volume day, at least 1.5 times the normal volume, and a good trend day. So not necessarily something I'm going to trade. Maybe even look for a short sale there if it pushes higher again for the second day because of the downtrend. But it's good to start making a game plan list. Even if you're not getting a signal on it today, you should absolutely be game planning these stocks to pay attention if and when they give you a signal because of the start of the volume. The cyber is an interesting one. We actually had this on the blog the other day as a potential short squeeze candidate, and we got a pretty good bounce out of it for a couple of days. Whether or not you're a short-term swing trader or a day trader, it's given us some pretty good price action over a couple of days. We had a reversal candle yesterday in cyber. You know what? Let me actually pull it up over here, easier to see. Here's the daily. So pretty good move out of the potential short squeeze. A much bigger pennant chart pattern for those of you that are drawing patterns. And again, I love drawing patterns. The mistake that a lot of traders have is that they think that they're going to predict what's going to happen next. Chart patterns don't predict anything. They give you a visual representation of what's going on within the institutional order flow, and then you have to manage the trade. It gives you ideas. It doesn't necessarily give you trades. And I know that sounds kind of the same thing. It's really not. It gives you ideas to now go and look and see if there's a trade within the pattern. That's a better way to word it. All right, so just to give you an idea, that was the way to scan down to a smaller list. So basically within that trading range, and did something significant yesterday, meaning had extra volume. So now MYL here, that's a pretty interesting one. Well, I don't normally trade that. I'd look to see what the news was, just to see if there was if it was a news-related catalyst, or if it just happened to be some buying volume. But look at that spike in volume. It's very, very important to combine an increase in volume with an increase in trading range with where it is on the chart. This clearly moved a lot more than it normally does. It probably exhausted its multi-day movement. You know, look, I mean, something inexperienced traders need to definitely put into their mental bank. You will get to the point where you recognize what a stock does on a normal basis, and let's just use simple numbers just to keep it. See, the stock here does an average of $2.58 average true range. Okay, so ATR. Oh, that's actually important. See where it says average true range 14? That means it's calculating what's the average range from low to high over a 14-day period, and it's telling us the stock normally does $2.58. So let's actually pull up this stock over here so it's just a little bit easier to see. So if it normally does $2.58, and yesterday it traded from a low of 60 to a high of 70.21. So just to keep the numbers round for illustrative purposes. It did 4 times its normal average true range on at least double what it normally does in volume. At least 1.5 times. You can clearly see here on the bottom that it did a lot more than just double. So what does that tell me? The stock was absolutely in play yesterday, and that, you know what? Let's actually drop down to an intraday time frame here. Go to 15, just so you can see the. Okay, there's what it looked like on the intraday time frame. It did 4 times what it normally does, so it has exhausted what it normally does. I would not be trading that stock today because it's tired. There's no other way to put it. Maybe you get a little bit of follow through, but the probability of it following through after this much institutional buying in one day, the probability of follow through is lower. So my point here is you want to find the best opportunities today. You definitely want to keep this on your list like the other stock that we were just talking about, but this stock would not be in my list today because in my experience, it's exhausted what it would normally do. That's my point. Okay? So jumping back into those 78 stocks, or what was it, 78, 97? I forget what the number was. I'm going to remove this 1.5. 97. So first thing we want to do is we are generally trading, whether you're day trading or swing trading, you're generally going to be looking at what it did this quarter. So I immediately go over to performance. So again, just to be very clear, I filtered the stocks out by share price, amount of volume it normally does, and average true range. And I left out ETFs, so I'm only looking at stocks. All right, so then what I did is I am now filtering by performance for the quarter. And let's stick with the long side for now. Let me pull that over just to make sure it's in the video. All right, so I'm looking at these stocks right now. So if I pull these stocks up in the charts, I'm going to be looking at stocks that meet this criteria, filtered down, and are sorted by what is strong for this quarter. Now, if I want to take it an even further step than that to see which of these strong stocks per quarter had a strong day yesterday, I could do what most traders do, which is very, very deceiving, and they just look at the net change. Okay, so that'll tell me, yeah, okay, it traded there, but I want to know if it had a trend day yesterday. Change from the open versus a trend day is not the same thing. So I'm going to sort it by change from the open 2% up. That's going to tell me that the stock met all of this criteria, is strong for the quarter, and had a big green candle yesterday. And that brought up 11 stocks. So you see what we just did there? We're constantly filtering it down to get to the point where we're finding good stocks that are strong over this quarter and strong yesterday. Now, if we really wanted to get it, we could, do a relative to the whatever moving averages you want to use. You could do the 20 or the 10, whatever one you happen to use. But just for illustrative purposes, I'm giving you a good idea of how to filter down stocks to get to the point where you have the best stocks that meet certain criteria in your list for that day. And you can clearly see here, every one of these stocks are strong. Well, this isn't strong. I guess this came into the filter because of where it is relative to the moving averages. But you know what? Actually, that's interesting. It's strong relative to this quarter. So we didn't have the moving average filter in there, and some stocks that are strong relative to where they were 3 months ago are showing up. So that's actually interesting. Another reason you have to go straight to the charts. Pretty interesting. That's a good lesson right there. That's a very good lesson. So anyway, that's what you do. You end up popping into these stocks and then filtering them down. And then I have another scan that I run. I'm just going to pull that one up. I have a list of 98 stocks. Let's just go to list number 1, and I'm going to do the same thing. I'm going to go to performance. Now, just to give you an idea where I came up with these stocks from, I took the most liquid holdings of the major ETFs, and it came up with a list of 98 stocks. So then I'll go to performance. I'll go to performance by quarter, and then I'm going to sort it by yesterday again, change from the open. Again, let me just pull that over there, change from the open. And that actually gave me no stocks, interestingly. So no stocks met that criteria. Very interesting. Let's see if we have down 2%. See if there's any stocks that are showing some relative weakness, and we are. So that's pretty interesting. So we did not have in that first list any stocks that met the criteria, so no longs in that list. and now we'd be looking for stocks to possibly short sell. And man, these stocks very very weak. I from what I see on the charts, it looks like they have more room to the downside, but we'll let them play themselves out there. All right, so that's basically how I sort, starting with the market, working my way down to filtering stocks having certain criteria, and then ultimately getting to the point where I'm looking at more specific price action from yesterday if it matches the longer term picture, which also matches that criteria, and then ultimately taking it into which stocks have trading opportunities now. So I hope that helped to help you at least have some structure to building out a game plan.